My best trade is always the same. It's in quality of life. And that quality of life is everything from friends, family, how you live, not where you live, not your material possessions. It's how you live your life. Having a lust for life, a curiosity, enjoying being outside of your comfort zone. I've talked about this before. There's your comfort zone and there's where the magic happens, and they don't overlap. It's that experience of life itself is the best trade.
Hi, everyone. Welcome to part 2 of my conversation with Real Vision co-founder and CEO Raoul Pal. Today, we'll hear about Raoul's final 2 trades and the biggest learnings he took away from them. Enjoy the conversation. So the third trade is one of the best that you saw, and it's a hedge fund trader who bought Eurodollar futures in January of 2001 and then went to his house in Mallorca to wait. So what is this about?
So between this trade and that Lewis Bacon trade, this is really how to trade macro, right? These two are the best macro trades I've ever seen. Yeah, George Soros and the pound, but I wasn't involved in that. I was directly involved in, well, not directly involved in the second one, sort of, because I was doing the trade similarly. So there is a trader at Tudor, and I won't mention his name for privacy, and we get to hear by one of the salespeople. I'm at GLG now, and so we get to hear of this story, and it unfolds over the course of the year. So I think it was January the 2nd, 2001, the Fed cut. The ISM had crossed 50, growth was weakening, and the markets had started pricing in cuts, but this was the first. So, this is how macro people think again. This guy went, well, we're in the middle of a stock market bubble. We've got debt problems. They're going to have to cut a long way, and the Fed never cut once. So, simple hypothesis. They never cut once. The market is only pricing in 75 basis points of cuts. Most likely, they're going to have to go 300 or 400 basis points. So that little bit of understanding, he sees, it's on January the 2nd. I think it was January 2nd or December 28th, something, one of these kind of really illiquid times. He rushes into the office, beginning of a new trading year, goes limit long Eurodollar futures for the end of the year. So Eurodollar futures are a bet on where interest rates will be over a period of time. And he's betting to December 2021. And many of us in the Eurodollar markets, we were super involved over that period because it was all about this rate trade, which made it very easy because rates tend to be less volatile, but tend to move a lot. So the risk rewards get very good and you get a lot of leverage in these things. So anyway, so he goes limit long. And then he has the understanding. So first he's seen the path, right? This is the future path that I talked about before, the knock-on effects. Then he also understands his time horizon, which is how long does this take to play out? Well, a recession's usually kind of about a 1 year, 18-month process, and they're going to have to keep going. The stock market already peaks at that point. So he realizes that, okay, the best single bet in the world is to bet that rates are going to go down, not to short the equity market, which is the lazy trade. It was to bet the stock market goes down, the bond yields go down. And Eurodollars were the best expression, best leverage, best risk-adjusted return. So he figured all this out. Massive, irresponsibly long position in this. And he gets on a plane and goes back to where he came from, which was his holiday home in Mallorca in Spain.
Because he had that much confidence.
Well, normally you would be sweating and biting your fingernails because you've got record risk. It was the beginning of the year for him, so he had new risk limits, so that helped. And he went, and the trade starts working almost immediately for him. And he does nothing. And his colleagues at the office are like, you coming back in? I mean, this wasn't work from home, right? You're working for one of the most famous hedge funds in the world. You're running a big book. It's not work from home, do what you want. They're like, you coming into the office? He's like, no. What's the point? He goes, I've got one trade to do. The absolute clarity, there is only one trade to do, and I'm in my trade. He said, there's nothing I'm going to do. The Fed are going to cut several hundred basis points, and I'm going to clean up. So that's it. Okay, so he's decently in profit very quickly because he saw the trade fast. And by about June, he's really up. He's now got the most profitable trade of anybody at Tudor. And Eurodollar's back up 75 basis points as the market starts saying, is this over? Is the worst over? Are the Fed not going to cut anymore? Right? These narrative shifts you get a lot. And the stock market's bouncing, blah, 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 blah. And he gets the phone call, the big phone call, the Paul Tudor Jones phone call. And Paul's like, I'm in London and I'd like you to come in and talk to me. So he gets on the plane, flies to London, goes to see Paul and Mark Horton-Berry, who runs the London office, and a bunch of others. And they call him in and they're like, okay, well, you had the biggest P&L so far this year. You've got huge risk on. You've just given a whole ton back. What do you want to do? Because your P&L is, your end of year bonus here is going out the window and it's only June. And he looked at them and said, I need to double up. And Paul went, fine. You know what you're doing. You know your risk limit. I'll double your risk limit. But you're playing with your own bonus here. And, if you get back to flat, you're out. Whatever it was. And so he gets back on the plane and goes back to Mallorca. So he's traded once, beginning of the year. He's then doubled the entire position size and he's gone back on a plane. He does not trade a single other instrument. This is a hedge fund guy. He's normally trading, just doesn't do anything. The one pure trade. And then it's about November and the trade is played out extremely well. And he gets back on a plane, closes the trade, takes his profit. Again, before it's reached its end, it actually goes further because 2002, things go further. He could have just kept the trade on, but he didn't. He took his money off the table. He then quit his job and retired.
That was it. That is pretty epic.
And I wrote about this on Twitter, and it became the basis of the buy bonds where diamonds trade in 2019. Because that was a situation where I knew the Fed had over-tightened. We knew that the economy was weakening. We didn't know about the pandemic. And therefore, the trade would be, the moment they cut was to buy bonds. And they started backing away in the pivot in 2018. So there was the trade setup. Buy bonds, wear diamonds, or buy bonds and go to the beach. It then plays out a second time because that's playing out. But then we get to this period where the economy is kind of stabilized a bit. The ISM's bouncing and we're kind of in this no man's land in 2019. And a lot of people are getting frustrated with the bond position. Some people have closed it out. And I'm like, really, if it's right, it should continue lower because the economic forward-looking data is still weak and it should be going down. So again, I'm not trading with my emotion here. I'm using my stuff. And then I see the pandemic and I see it in 2020, January, and I figure out immediately what it meant just by chance. And I just remember the moment it went to Italy, I just wrote a note to Global Macro Investor, which was titled Panic. And you just knew what had to happen is there is no way we were going to get through this without massively cutting rates. And that was all an extension of the learning of this one trade, is how to take the purest expression of the view when you know that the probability is so far in your favor that you have to be greedy.
So Do you think that this is about skill or luck?
Both. The skill is knowing, and George Soros writes about this, Stan Druckenmiller, they all talk about it, is knowing when to be greedy. You won't get it right every time. But when you get it right and you're in the groove, Paul is one of these people, Jones he knows when he's trading well. And he'll back himself. George Soros, The Alchemy of Finance, talks about this a lot. You back yourself when you know you've got it. You're feeling it. Your trades are working. You're with the flow of the market. That ability to choose that moment, a lot of people chase that moment their entire careers because they get it once and they want to do it again. And that was kind of 2009 for me a bit. You have to be really careful because they're super alluring when you get it right. It is the greatest feeling in finance when you get that moment in time where clarity comes, you see it, and you are really greedy with the opportunity. But God, chasing that thing, if you're not careful, you'll go bankrupt doing that.
I think Sergio Silva, we were talking about a different asset market, but I think he said being prepared for when luck comes your way. So the skill is being prepared and ready, and then you can sort of know what to do or optimize that when luck strikes.
See, I don't think there's a lot of there is luck, but generally with something like that, there's not a lot of luck because that was preparation, understanding, homework, assessing what is the best risk to take and everything else. The luck is usually the speed at which it happens.
Like a pandemic hits and then...
Yeah, because that allows you to stay with the risk. If that guy had come in from Tudor and the whole thing had moved 50 basis points against him, he would have been stopped out and he would never have done the trade. So the luck was the speed of the initial move, because then any retracement never took him to a negative P&L, so he could handle it. You know, the luck in this kind of situation is that.
Your last trade is one of yours, and it's one of your worst, and it's probably, well, it's Bitcoin trade back in 2013 to present, I guess. I don't know. I was going to say currently, although I think you're more ETH than anything else. But why does this count up as one of your worst?
So we talked about trade construction. We talked a bit about time horizon. We've talked about when to be greedy, all of these things. And this is a story of me learning other things as well and trying to put it all together, doing the right thing and still getting it wrong. So let me try and explain what I mean. So after the European financial crisis, the sovereign crisis in 2012, and most people have heard the story that, you know, this became the reason we started Real Vision, because people got destroyed by it. But I also wanted to start the world's safest bank because I knew that we didn't own any assets. Cyprus had taken all the money out of the banking system. You know, it was a terrifying time. And I knew that debt burdens hadn't gone away. So that's when I got introduced by a good friend of mine, Emil Woods, another, I think he's ex-Goldman, who ran a large hedge fund in New York. And he's like, you need to look at Bitcoin. Forget the bank. Here's something interesting. And so 2012, I first look at Bitcoin properly. I write the first macroeconomic strategy paper on Bitcoin in about, I think it was March 2013. And I do the analysis and say, well, if it's like gold, then we know kind of how much gold's above ground, and we know how much gold is probably below ground. We have an idea. That's called a stock to flow. And I could probably back that out in Bitcoin to give us an idea what this bloody thing's worth. Because we know it's interesting, but we don't know what it's worth. So the macro guys were interested, but didn't know. And it already done a decent, cycle already. It performed extremely well. So it was interesting. And so at the time, Bitcoin was at $200. And I thought, the maths worked out that it was worth $1 million. That's with the equivalent of gold at around 1,300, which is not a million miles from now, right? Gold's actually gone nowhere over that period of time. So it's worth $1 million and it's at $200. So learning the lessons of hubris, I'm just going to discount myself by 90%. And I like to do this periodically. I just said, well, I think it's worth $1 million. Let's rate the Raoul is an idiot factor by 90%. We'll turn up the idiot dial 90%. It's still worth 100,000. So that's the best risk reward I'd ever seen in my entire career, and any of us had ever seen. So I'm like, well, we've got to buy this, right? It could go to zero, but it's an option. So I've probably got quite a few people in it. And that article became famous, got circulated around Silicon Valley because nobody looked at Bitcoin in a macro way before. So I buy it, and my thesis, my time horizon is, so I've done my homework. I'm now onto the time horizon. The time horizon is, well, this is probably at least a 5-year bet, probably longer. And I should just close my eyes and see where it ends up, because it ain't going to $1 million overnight or $100,000 overnight. So it goes up 5x it goes up 100% in a week, after 2 weeks after buying it. I'm like, shit, what the hell's this? It then goes up 5x from where I bought it. And I'm like, clearly I'm just George Soros. I'm just a god, I can't get it. I'm just so amazing. No, I wasn't that hubristic about it, but I was like, wow, okay, this is something I've never seen before. It then falls 85%, but it goes back to 200. So, okay, I've never lost money in it. Never lost a penny. In fact, I've never lost a penny owning Bitcoin at all. And I just forget about it. I've opened an account at an exchange called Itbit, which is now Paxos, which was owned by Emil Woods and Chad Cascarilla. They built this exchange in Singapore, and I kept it there, and I forgot about it. I didn't even know the password. I just, and I keep my eye on the Bitcoin price because I was interested. We launched Real Vision 2014. It's in the first ever video on Real Vision. In fact, in that little Genesis video that I shared recently, there's the Bitcoin logo, right? So I knew where this was going, is the macro crypto, we're going to meet in the next recession. And I've made that clear and tried to bring as many people on the journey as possible. I don't trade it at all. 2017, I'm now quite involved because it's spilled onto Real Vision. There's a lot of emotion going on. People are really involved. I still own it. I'm kind of quite vocal on Twitter, starting to talk about this. And it's now back to $2,500. So I'm now up 10x. So 10x, that's a great bloody trade. You don't get those many in your lifetime. And so I start thinking, actually, that's quite a lot of money now. And I'd also just got divorced, and I needed to pay my ex-wife half of that. And the forking wars happen. So this is when they replicate the Bitcoin chain and create a new one that has some different attributes. And I didn't understand this stuff. And so when you don't understand it, you should close it. Now, I shouldn't have, because my thesis was longer term and that I should let it play out. But it becomes really hard when you're up a lot of money and you owe half it to your ex-wife. It's become very hard is when you then go back down, right? And it's hard to do if the forking wars had been a thing and it meant that the Bitcoin chain failed and everyone was on Bitcoin Cash or whatever it was going. So I take profits. I don't think anything of it. I'm like, great, it was a great trade. It goes up another 10x, goes to 20,000. And I am observing it. I have no feelings. People are like, you're an idiot on Twitter. Look at you, you're an idiot. I have no real emotions either way. I'm like, I've done fine, happy with it. Let's see where this goes. And then, I do a few pieces on Real Vision around about December 2017, saying, look, I think it's a bubble. I spoke at the Consensus conference the day before the bubble popped, saying, look, I think it's a bubble. Fine. So, I'm feeling quite good about myself. I bought it. I kind of got the top pretty much right in terms of telling people I sold that too early. Fine. All well and good. I then observe it. We have like Bitcoin Week on Real Vision. I'm seeing what's going on. There's nothing really happening. It keeps falling. So it's 2018, 2019 keeps falling. But Dan Tapiero, who hadn't been in Bitcoin beforehand and was a long-term global macro investor subscriber, an old friend of mine, kept pestering me about Bitcoin. And Dan's an amazing thinker. He's really one of my really trusted go-to macro people. And he kept pestering me on Bitcoin. I'm like, yeah, I'm just not interested yet because the price was falling and I didn't have anything to base an investment off. And we had no real thesis yet. Yes, the economy was slow, but there was no real understanding what was going to drive this. And anyway, I eventually get him on Real Vision because I'm like, the only way to shut you up is to interview you publicly on Real Vision. So we have an amazing conversation. He completely opened my mind to things I had not understood about Bitcoin and cryptocurrency overall. And my thesis was that the next recession, Bitcoin's going to be something. So I've been watching the price like a hawk, and it'd been wedging slowly in this triangle formation. And what I really love to see, and that reminds me, several times in the past I've traded it, is something that comes up, forms this wedge, and it kind of touches it once, down to the bottom once, up to the top once, down to the bottom once. It kind of goes up to the top once, and then it pulls back into the middle of the range, and then explodes higher. This little flag pattern is a really great pattern, and I was expecting this to be happening. And so March 2020, there it goes. It plummets right from that wedge, top of the wedge, straight into the middle of the range. I'm like, I have to buy it. And so I put in all available cash. Yeah, I had some other positions at the time. I had Eurodollar futures and I had some other stuff, gold and other stuff. But anyway, I bought it. I made a big thing of it. And that was at around 6,500. And it explodes higher. And it goes up to 68,000 and back down to where it is now. And I switched into ETH and made, that was a great call because it made a lot more money from it. And this bet in March was by far bigger than my original bet, massively bigger. It's like I just put everything in, irresponsibly long.
Yeah, that's where the t-shirt comes from, right?
That's right. And so I'm like, okay, so I bought it really cheap. I sold it 10x. I then bought it again, but at a much higher price than I sold it, because I sold it at 2,500 and I bought it at 6,500 and maybe a bit up as well as it broke through 10,000. And now it's at 20,000. Okay. I thought nothing of that. I thought, yeah, I've done well. Look at me. I'm a good macro guy. I traded it, did all right, made money out of it. Not that many people have done well out of crypto like that. And then I went back and did the maths. And it only happened to me recently after I set up the Exponential Age, the digital asset management business. And I was writing for Macro Insiders as well, for Real Vision Pro. I thought, I want to know how I actually did compared to if I just held on to my original thesis. So I went back and looked. And I remember how much money I put into Bitcoin to start with. And it was a decent amount. It was a decent bet. But not massive, but, it was quite a big bet for me. And if I'd have just held that bloody position and not done anything, not any of the cute, I'm a macro hero, look at me, I can be Stan Druckenmiller, I would have made 5 times as much money. But, and here's the big learning, is I hadn't understood exponential trends, logarithmic trends, and adoption, Metcalfe's law, all of these things that subsequently came to me. And that tells you if a technology is about to be adopted at scale, then it doesn't revert back to the mean. It reverts back to this logarithmic channel, the bottom of that. And so you should buy, unless something completely changes your trade thesis, you should just buy at the bottom of the channel when it gets oversold. So I figured out if I just added the same amount every time as my original bet in the couple of times that it got to the bottom of the channel, I'd have made 25 times my money.
Oof. But that's that's having to learn, right? That's a little bit different because of the nature of this, or is it the technology and the nature of this newer asset than what you would have your prior experience had led you
No,
to?
because we should have done it with the NASDAQ as well, and we didn't do it. We should have done it with
Right.
Amazon. We didn't do it. None of us did, because we're all mean reversionists, because we think boom equals bust, and it does not in technology. Even when you go back and the tech crash of 2001 that so many people still think about on Twitter, see, technology, it's a bubble. Go back and look at the chart on the NASDAQ. It was just noise. It was noise and an adoption trend of the internet that happened.
So it's so interesting because you say this and you look at your charts and you're sort of applying this sort of intellectual framework to this. And yet, you know that there is such tribalism around this conversation, and you have a massive public following now, and people get really heated about this. I mean, for every person who says, yes, that makes sense to me, there's somebody who's attacking you for shilling shitcoins. And so how do you deal with that when in your mind you're just operating on and kind of fine tuning the framework that you've always used?
It's been really interesting. It's the outside of crypto, which is fine. It's kind of tribal, but this whole exponential age thesis, which is saying, okay, I cannot see a world in which this probabilistically does not play out. There is no way, and I've just done an interview with a good friend of mine, Emad Mostak, on about artificial intelligence. There is no way that this is not happening faster at a bigger scale than anything you've ever seen in your life before. And that's the same with robotics. That is the same with space travel. That is the same with the Internet of Things. That's the same with genetic sciences. It's the same with blockchain technology. I mean, these things are happening. They're not going to stop. There's nothing that will or can stop them. Not, the Fed raised interest rates. The natural rate of interest rate is going to be higher at 4%. It's not going to stop. And these things are exponential. These things are doubling, quadrupling every year. And so I'm trying to get people to understand that I understand that you might fear it. I understand that you know of the world in terms of the things that you know. You know, the Federal Reserve bad, oil good, markets go up and down, boom equals bust, right? These things are so put into us that money printing equals inflation, narratives, that most of these are narratives. And I'm like, okay, you can either invest like the gold guys for a long time said the great inflation is coming. And they bought gold. And they said quantitative easing, debasement of currency, gold. And they're going to confiscate your assets, gold. All of those things have happened. And gold is still nowhere in real terms. In fact, it's negative. In fact, gold mining stocks that have been every newsletter's tip for the last 40 years are all-time record lows in inflation-adjusted terms. So, but people have this belief, and I don't want people to miss an opportunity, because we can fear change or we can use it to help ourselves. You may fear AI. Christ, I do. But what am I going to do? Am I going to own gold, or do I just buy AI? You know, this is a mindset that you have to go through.
So that you have to have that big picture, but this is where you can't get, we know not every company will make it, right? Like this is where it gets tricky, because you can believe in the trend, but we know from the dot-com bust, some of them didn't get through, although now a company that pretty much does what they did, that just timing wasn't right or their revenue didn't come quick enough. So that you can believe the bigger narrative, but you have to be careful.
Okay, so what was the right answer is the answer I learned from crypto investment. You buy the massive sell-off. So I bought a whole basket of this exponential age stuff, not at the highs when I started talking about it, but after it was down 70%. because I kind of have a rule of thumb. Anything down 70% or more that is not going bust, you should own, particularly if it's part of a secular theme. So the trade's still not up. I think overall it's down about 15%. But, I'm like down 30, don't really care because probably it's going to be up 10x. So, it's the risk-adjusted reward is what you're looking for. Down 30%, up 10 times, you'll take that risk reward all day. Even if I'm wrong, let's discount me. Discount me by 50%, it's up 5 times. Okay, but still an amazing bet. 3 times, it's still a 10x. So that's how I look at these things. And what I did was spread across a basket of different stuff. So even though I talk about ARK, people think I just own ARK. ARK is one of the positions that I have. I have a whole bunch of ETFs on robotics and all sorts of stuff, plus some single stocks like Reliance in India and a whole bunch of stuff to spread that risk out a bunch of names, because of the point being, as you say, we don't really know. But I know probability is better if I buy the sell-off. That's the Bitcoin lesson. Also, as you say, we know the direction of travel, but we don't know which ones are going to travel there. So let's get some diversification. You set your time horizon, which is, okay, this is probably a 5 or 10 year bet and it's going to be volatile. Okay, so those are the parameters. It's pretty straightforward. And that all comes from the learning of stuff like what happened in Bitcoin, how to express the trade from the guy in Mallorca who's like, you see the trade, it's the best risk reward. Like I've always said, crypto has been is and will remain the best risk reward. But for equities, these are interesting too. And I just think it's intellectually important to participate in something so disruptive that even if it may not make as much money as you might make in crypto overall, I think it's just really important to be involved. Because if not, I can sit on Twitter, you'll drive yourself mad by rejecting it. Like I remember Amazon, and I've talked about this in past. Amazon bookseller, great. Amazon Kindle, great. Love this, right? Now it's worth more than every other bookseller in the world added together. This is stupid. This is insanity. Trading at a P of 800. This is ridiculous. I'm a macro guy. This is the most ridiculous thing. I want to short it. Keeps going up. It's like Tesla. People have just gone through this whole experience with Tesla. It's like, because it wasn't a fucking bookseller. It was a network. Right. And once you understood it, wouldn't have made the mistakes. And it's that clarity. Once you get the trade, you stick with it, get the time horizon, get the trade expression, and that's it.
So last question, do you think your best trade is still ahead of you?
My best trade is always the same. It's in quality of life. And that quality of life is everything from friends, family, how you live, not where you live, not your material possessions. It's how you live your life. Having a lust for life, a curiosity, enjoying being outside of your comfort zone. I've talked about this before. There's your comfort zone and there's where the magic happens and they don't overlap. It's that experience of life itself is the best trade. And the game is to accumulate as much quality of life. And that can be a walk in nature. Or it doesn't have to be anything. It's not material. It's a quality of life. And if you've got that and your bank is full, your account is full of quality of life and quality of life experiences, that's the greatest trade on earth. And I'll continue to do that trade until the day I die.
That's fantastic advice. Raoul, thank you so much for being on.
Not at all. It was a lot of fun. I hope I didn't bore people.
Oh, no, it's great. All right, that's a wrap on this week's edition of My Life in 4 Trades. For more on the series, visit realvision.com/My Life in 4 Trades. Make sure to use the numeral 4.
Hey everyone, thanks for watching. If you like this show, you're going to love Real Vision Essential. At Real Vision, we talk to the most successful investors in the world and deliver videos that make finance interesting. It's all about helping you become a better, more confident investor. Now, we could dress that up in fancy marketing buzzwords, but it's really that simple. Oh, and right now, you can join Essential for $99 for a full year instead of the usual $239. Visit realvision.com/essential99 to join the Real Vision community. That's realvision.com/essential99.